the sky is pink and white, if the ground is black and yellow, it's the same way you showed me. Nod my head, don't close my eyes, halfway on a slow move, it's the same way you showed me. If you could fly, then you'd feel south, up north's getting cold soon. The way it is, we're on land, so I'm someone to hold true. Keep you cool when it's still alive, won't let you down when it's all ruined. Just the same way you showed me, you showed me love, glory from above, regard, dear, it's all downhill from here. In the wake of a hurricane, dark skin of a summer shade, nose dive in the floodlines, tall tower, milk crate, it's the same way you showed me. Cannonball off the porch side, older kids trying off the roof, just the same way you showed me. You showed. If you could die and come back to life, up for air from the swimming pool, you kneel down to the dry land, kiss the earth that birthed you, gave you tools just to stay alive and make it out when the sun is ruined. That's the same way you showed me, you showed me love, glory from above, regard, dear, it's all downhill from here. Remember life, remember how it was. I'm G, Michael Jackson, all this shit. Say what up to Maggie, the shoe. Say what up to Benny. Say what up to life and mortality. Running on my bikes, running up. Not for me, 18, still in granny six. Take it easy, give me something sweet, which I might like immortality. This is life, life, immortality.
Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is February 20th, 2023, and Bitcoin is very likely, highly probabilistically going to breach, not only breach, but break and break out from this $25,000 resistance level, okay? And the thing I would add to that is the target is not 30K, okay? Why do we set targets when we're trading? It's because we want to take profit. You want to avoid a drawdown, okay? There is some resistance at 30,000, but that isn't even the measured move of this breakout pattern. And not very many people are talking about that. A lot of people are saying 30K, 30K, 30K. Seems to be a thing, a consensus. So we're going to look at why that is unlikely, although there may be some resistance at 30K. All right. So we're going to look at that. We're going to look at Bitcoin on other time frames. We're going to look at our alts and see how there are many altcoins that have already started. All right, they have already broken their proverbial $25,000 resistance, and they're in full force on their bull market. All right, and finally, we're going to look at the U.S. dollar currency index, which you see in front of you, because for any of this to happen, the DXY's got to move. So let's start with that. All right. Now, I know a lot of people have said that today you shouldn't expect much from the market because it's President's Day in the United States, which is, a national holiday. So people believe that if the traditional markets aren't trading, then you're not necessarily going to get anything from the cryptocurrency markets. And to that, I'll say yes and no. Okay, the traditional markets are the DXY. So when you look at the US dollar currency index, it's a basket. It's an index which is a set or an agglomeration of various metrics, right? So you have the US dollar and you have it pegged versus a basket of foreign currencies, right? 6 in particular. And when those are trading, not only the US dollar, but those 6 currencies, then you're going to get a lot of movement in the DXY. But if, let's say, just one of those markets isn't trading, then you're not going to get much movement in the if just one of those markets aren't trading, then the DXY still operates. The DXY doesn't have any literal holidays, right? It's not like an actual market of an asset that's being traded. Because it's an index, it depends on if the US dollar, US stock exchange is trading, if the French exchange is trading, if the Swedish exchange is trading, if the Canadian exchange is trading, so on and so forth, right? Given that it's President's Day only in the United States, every other asset that comprises the index, that is the DXY, is trading. So we should still get some movement in the DXY, albeit maybe not the most movement, but we should still get something, which is why you see on this chart some movement, right? If it's a national holiday where not only the US stock exchange is closed, but also the Swedish exchange, the French exchange, the Canadian exchange, the English exchange, you don't see shit all on the DXY. I hope that makes sense. So when people say it's a national holiday in the US, so don't expect anything from the crypto markets, that's false. Because everything moves off of the underlying asset, the US dollar currency index, and if the DXY is trading, then you should expect some movement in crypto, all right? In Bitcoin. So that's what we're seeing now. We're not seeing a bunch, but we are seeing something, okay? And as you can see, we have some candles being printed here on Monday. And essentially what we're putting in is a very bearish pattern. Let's zoom out for a second. If you will remember, we called the DXY hitting major resistance of this 450-day level right here. This dotted line is 450 days worth of resistance. For those of you who are newly subscribed or who don't watch the live streams that carefully, this is how we got this trend line, okay? It's one thing to just draw random lines on charts. It's another to know how to draw random lines on charts, okay? This isn't a random line, okay? The reason it's not a random line is because we can clearly see that 1, 2, 3, 4, 5, 6 other times price has respected this level. It doesn't have to be orthogonal. It doesn't have to be straight horizontal, right? You can have diagonal levels that are really, really well respected, like this one. So this is proof, right? And the time that this is taken is about 460 days. So this is significant even on the weekly time frame, okay? So 460 days thereabouts, and multiple touches on the line. So you know next time price or the asset interacts with this level, it's going to be significant. And that's exactly what we saw. So if you go on the daily time frame, you can see you got a rejection as we hit right to the point, as we hit that level. And do expect that rejection to continue. You could see that in our momentum indicator. We have that rejection showing us complete overbought momentum for the DXY on the daily time frame. The weekly time frame is also quite overbought. Okay, so this is also telling you, for people who think that the bull market isn't here yet and all that stuff, like, whatever. there's so many different signs. If you can't see it now, I can't help you, right? The whole double bottom is coming, and you can make a lower low. It's just, you know, you're never gonna get 100% like, you know, flashing lights. Like, this is going on in the market. This is going on, and this is likely to happen. But this is as close to a flashing neon sign as any, right? For those people who think we're gonna go to 10K or something like that. Everything's possible. Don't forget, everything's possible. Not everything is probable. Yeah, and I think 2023, to be honest with you all, is the year of exposure. Right? Some of my colleagues are gonna get exposed. I'm sorry, because there's some sloppy analysis going on. It's one thing to say it can go up or it can go down, in, you know, in your day trading, and that's fine, right? Because there's a lot of volatility. And it's prudent to day trade that way on a small time frame. But when you're zooming out on the daily, on the weekly, and you're seeing something as blatant as this, and you're saying that the DXY is bullish, or that you know, even stock market, even though it's in a bear market rally, that it's bearish, I don't know, man. I don't know. You know, that's why it always comes down to, whether people are exposed or not in 2023, it always comes down to you, right? Whoever consumes the content, that's who it comes down to. It doesn't matter how many TV shows they go on or how many people call them master traders. If you guys aren't educated, you guys will consume without any discretion bad information, just bad analysis. And yeah, you won't even be able to tell what's good and what's bad. So really, I can't underline that enough. Do your own research. It's now more important than ever. Nobody's going to tell you who's a good analyst, what's a good idea, what's a good sort of trading thesis. You have to figure that out on your own. All right. So going on the smaller time frames, you can see that you touch this line, and it seems to be that you're doing one of two things right here. You're either bottoming out, preparing to retest it one more time, right? Or, as the hourly time frame would suggest, you're likely putting in some sort of move like this, which is a breakdown of what it looks to be some head and shoulders bearish reversal pattern, right? So that's what it looks like to me on the hourly time frame. I feel like on the 4-hourly time frame, this is a false bottom on your momentum indicator, meaning it's not going to cross bullish. It's unlikely. I don't know if it will, but it's unlikely to cross bullish. It's probably going to stay open, and you're going to get a quick dump down right there. Okay, probably a bounce off of this level and then a dump down like that. Okay, that's what my hourly time frame is showing me. That's what my 15-minute time frame is showing me. Okay, so I think that's likely. And I believe, furthermore, that a break of this level, you can see this is clear support for the price. A break of this level is more likely than not where you get your rally break of 25,000 in Bitcoin. Okay, as I said, because this is a bona fide bull market, there's so many guys. When we say this is a bull market, I'm not just making it up, flipping a coin. This is not based off of one chart, one index. This is based off of so many things. If you follow my work, you can see a bull market on so many different charts. You can see an equities bull market by looking at the DXY. You can see an equities bull market, a crypto bull market by looking at Bitcoin dominance. If you know what you're looking for, you can see it, okay? How do you see a bull market looking at Bitcoin dominance, you ask? Okay, quite simply. A bull market, and you can backtest this, and I suggest that you do, right? Part of doing your own research. A bull market is always in crypto, or it has always been in cryptocurrency, when Bitcoin dominance falls precipitously, falls impulsively, okay? And in that, you get altcoins, right, non-Bitcoin assets, non-Bitcoin cryptocurrency assets gain against Bitcoin in market capitalization, okay? That happens on a smaller time frame whenever Bitcoin dominance falls a little bit, right? But I'm talking about, again, precipitous falls. In the same way, whenever you get a high time frame rise in Bitcoin dominance, that coincides with a bear market, okay? So you can see this. If you want to study this chart, you can just superimpose this with or match this time frame to time frame with the Bitcoin chart and study what Bitcoin dominance means, really, right? What it means to you. Don't take anybody's word for it, anybody's explanation. Really understand it and integrate it into your understanding of what this market is, right? So you can see that we're clearly at some sort of resistance here, and we actually broke down from this resistance, put in an intermediate kind of, what is this, a counter correction, if you will, because I think this is a bear flag as I drew it, right? You get 5 impulsive waves down, 3 impulsive waves up. You're going to continue down. That impulsive move down shows you that a bull market is here, okay? So it should not surprise you. There's so many ways to look and see and confirm that this is a bull market, okay? You got to be really not paying attention to so many things to not understand that we're in a bull market. That's not a difficult thing. The tough, challenging thing is trying to see, okay, what the bull market's going to look like, projecting it, right? Going into details. But the fact that we're in a bull market's really clear. You can look and see in your watch lists. You'll see a lot of green. You'll see multiple double-digit gainers. And you'll see this not just once, not just from one asset. You'll see this from multiple assets on multiple successive days. For instance, I have a key, self-key, right? This went up something like 100% yesterday, or the day before yesterday. And then yesterday it went up 100%. And then today it's also flirted with 2 figures, double figures, double percentage figure gains. So, I mean, it's really clear just looking at not only the market structure, the high time frame resistance broken to the upside, that we are in a bull market, okay? And obviously, we're going to talk about Bitcoin. This is a daily Bitcoin update. I know I'm talking about alts now, but I'm trying to prove a point. I'm trying to emphasize or underline the idea that when we're in a bull market, what you see is because Bitcoin dominance goes down, or rather, I should say, when we're in a bull market, crypto operates in such a way that the altcoins move first because they have a smaller market cap. Okay? A smaller market cap means lower volatility, less is needed to move the price. So you should see smaller market cap projects like Self-Key, like Dodo, break high time frame resistances and already front run Bitcoin. Okay, so this is another way you can tell we're in a bull market. Okay, you should see front running, and the crypto market is such that things move in concert. You don't have, it makes me laugh, like there's just so much garbage out there. I'm saying, like, you have people, big accounts saying, this is the narrative that you want to follow. AI, or you want to follow DeFi, or this and that's going to make you a lot of money. But my friends, in a proper bull market, everything runs. It doesn't matter how shitty. Everything runs. The good thing about the bear market is that it shows, okay, what projects have sustainability, what projects have funding, what projects have actually do have use case. And you actually can see that technically in their breakdown, in their consolidations, how volatile their price action is, how well they hold support. You can literally see the quality of the price action. But sometimes the the consolidation is not always a direct correlation to the quality of the project. For instance, a lot of projects that do staking, you'll see them bleed. Like Cardano always prints these consolidations that droop, meaning it's not a straight line, right? It's not a straight channel of consolidation. It's always downwards consolidation. And you would think that, oh, that means it's a bad quality project. No, it's because there are staking rewards and people constantly taking profits off of their staking. Okay, so there's a lot of things that go into that. In any case, the bull market is not where you can see the quality of a project, because everything pumps. So if you're really in a bull market, it doesn't matter what the narrative is, AI, DeFi, TradFi, whatever, synthetics, everything's going to pump at a certain point in time. So all you want to do is prepare yourself, be exposed, take advantage of it, and wait. We're going to talk about this more, but so many people are going to, out of fear and ignorance, take profit way too early, right? Nobody ever went broke taking profit. Sure. But there's a difference between selling the bottom of a big move and selling the midpoint or close to the top. There's a difference, that could mean, life-changing wealth versus, a little extra pocket change. So this is why we do technical analysis. This is why we study the charts. This is why we prepare with a high time frame plan. So we're not trading in and out like a range trade of a massive trending move. All right. So going to Bitcoin, because most of you all are here to learn about Bitcoin. This is the main asset, all right? And I said in the beginning and in the thumbnail that this is likely to break out, all right? Now let's look at it on the small time frame, and then we're going to zoom back out, okay? So let's jump down in the 15-minute time frame. And what you're seeing here, it looks maybe not the most bullish, but I wouldn't be that concerned. Why? Because what you've done, first of all, this level of 25K, what are we doing? We're consolidating at resistance. What do we know about rejections? Rejections look a certain way. Rejections are typically big A waves. An A wave initial break of structure, right? In 3, that's a rejection. But then the B wave comes up. The B wave can look like a lot of things. After that, you get a pivot, and then finally you get a dump down, okay? So this could technically still be a rejection, but it's unlikely to be that, only because this looks complete. This running flat correction with an initial break of structure, maybe the initial break of structure is that, okay? And this is the intervening B wave, okay? And this is your impulsive wave. So that's your complex. I would say it's a WXY, okay? I'd say it's a double 3, okay? I wouldn't say it's an ABC flat correction, but it's a WXY running flat correction, okay? After that, it seems as if you're getting a recovery here, okay? At this point, right here around 23.8, okay? So now let's focus on the recovery. If you look at this, you can see that you've built or you've printed a very nice inverse head and shoulders, okay? So you printed that inverse head and shoulders, you broke the resistance to the top, right? And what do you have to do when you break a resistance? On this time frame, on the 15-minute time frame, this does constitute significant resistance, okay? I know it's the 15-minute time frame, but on this time frame, it took us 16 hours to break this inverse head and shoulders to the upside. So this is indeed significant. What do we know? Trading 101. There's so many things that we don't know, but a lot of things stay the same. There's so many things that we don't know, but there are a few things that we know 100%. One of those things is that. Staunch resistance has to be retested as support before continuation. That means once you broke this to the top, you come at some point in time, you're retesting this. Question is, was this a sufficient retest? Because are you finding support? Let's zoom out a little bit. Are you finding support at this level some way, somehow? I don't know. You can, okay? This could be the retest, okay? We don't know. We know that we need to retest this level that was broken to the upside, but we're not exactly sure what that retest is going to look like. Is it going to be a to the penny retest, or is it just going to retest the level? Okay, this may have been it, but don't be surprised if we come all the way down here, retest it, and then bounce off. Okay, that's another thing that is really that's just unconcerning, right? If we move down all the way to 24,500 just to retest this inverse head and shoulders, that would not be concerning. That would be par for the course of a bullish retest of resistance flip to support. Okay, that's called an RS flip. Let's look at our indicators now. And our 15-minute stochastic RSI indicator looks like it's coming down. Okay, so we're going to wait for it to bottom out. So maybe it's already bottomed and next candle starts to turn back up, or maybe it has one more to go. On the hourly time frame, looks like we're rounding out. So we're bottomed at the midline. Okay, so it looks like we're going to round out. Okay, on the 4-hourly time frame, looks like we're starting to come down, but we haven't even come up all the way. So we may do something like this. Okay, and yeah, so that's pretty much how I'm looking at it on the small time frames and the larger intraday time frames. I'm not concerned if we come back to this level, because I understand RS flipping. I understand that you have to retest important resistance into support before continuing. But there's nothing bearish about this. Not at all. There's nothing bearish whenever you're hovering around resistance, okay? Hovering around resistance isn't bearish. Obviously, you can distribute at resistance, but distribution is a little different, because distribution involves putting in a certain channel, a distributive channel, yeah, where you're breaking up. Sorry, you would be breaking down. That's your initial break of structure. Then you get a B wave. Then you have a secondary A wave, secondary B wave, pivot, and then a complete breakdown. Our RSI is not telling us that, and the idea, the trade idea on the higher time frames are definitely not telling us that, right? The 4-hourly is showing us that this level was retested as support in a double bottom, right? Broken, retested as support. You expect a breakout, expect that breakout to continue. So that's what I'm seeing for Bitcoin. All right. Now, to address the targets, right? Let's say we do break out, okay? First of all, what are we breaking out of? Some people are seeing inverse head and shoulders, right? Which I don't really see. I honestly don't really see. I think some people are drawing it like this. Okay. It's just, it's a bit sloppy, right? In terms of these the neckline, right? When you have an inverse head and shoulders, you want a consistent, any head and shoulders, inverse or regular head and shoulders, you want a neckline. So maybe that is the neckline that they're drawing. This is the inverse head and shoulders. Maybe that's possible. Okay. In which case, the target would be acquired by taking the distance from the head to the neckline, superimposed from the site of breakout. Okay, and even that doesn't give you 30,000. Even that gives you about 36,000. Do you see what I mean? Like, in no universe do you go to 30,000 and just stop. Okay, and we're gonna look at to why that is. Okay, so the inverse head and shoulders target, technical target, is 36, and actually the pattern I like more for this whole thing is this cup and handle, right? I think this is more likely a cup and handle that you're breaking out of. And so that target would be, once again, you take the cup from the bottom all the way to the top resistance, which this clearly is, right? This line represents the neckline of this entire pattern. And this pattern is, I would say, more probable of, it's more likely that this is the pattern that you're breaking out of, because it's just cleaner, it's simpler, it's more obvious, it's larger in duration. Do you see what I mean? Like, you can find a lot of little patterns, but at the end of the day, the one that's most likely to be the more reliable pattern to measure your breakout and technical target with is going to be the larger, the larger, cleaner one. I think this is the larger, cleaner one, right? This, as you can see, we've been in for 252 days, okay? So I think this is more likely than not the pattern. And if you do a superimposition of this, the distance from the head of the cup to the neckline, superimposed from the side of breakout, which would be 25K, there you get 40,000, okay? And why do again, there's so many reasons why 30,000 doesn't represent the next target. It's just not it, okay? And we're going to look also on the daily time frame why that is. So, if you look at 30,000, right, objectively speaking, you don't have to turn on your VRVP. I think this is a lot of traders, more and more, the more we become, the more developed we become in these trading indicators and these charts, the more people develop indicators and tools. And an issue that a lot of people have is that they're forgetting how, like, they're not understanding the essence of the tool that they're using. They just use the tool and they don't think about how it's programmed and what's behind it. Essentially, when you pull out your visible range volume profile, your VRVP tool, you're doing this, but actually in a crude way, because the computer, the algorithm, doesn't always calculate the horizontal volume that accurately. It doesn't always do it that well, okay? Here you can really see, and you can distinguish noise from actual trends. And what do you mean? What do I mean by that? You can see that there's a cluster of activity, of buying and selling, of support and resistance in this case, right here, right here, right here, right here, right here, okay, and right here, all right? So it's a bit all over the place. It's not a clean line. If 30,000 were a really clean resistance, the clean resistance that many people pretend, you would see consistently over this period of time, not just, you wouldn't see such a drawn out range, right? Do you see here? You can tell, just characteristically, when you look at these charts enough, you can tell what's clean and clear resistance and support and what's approximative, okay? This is approximative because you see a lot of wicking. You see a lot of variation. It's kind of like there's a large range in and around the 30,000 region. Actually, it's not just the 30,000 region. It goes from 29 to 42, right? This is a high sort of amplitude of price action. These ranges are large, right? When people say 30K, they're just pulling out their VRVP and looking for the volume node. This is not what we do if we're serious traders looking for serious levels. where price is likely to react, right? If you use 30K, what's likely going to happen is you're going to take profit way too early, and you're going to kick yourself because price is likely than not, more likely than not, going to eclipse 30K in that move, okay? For a few reasons, most of which is the fact that if we're really in a bullish trend, if we're really in a bull market, even if this is just a bear market rally, when you go up, you don't go up to meet resistance, you go up to break resistance and flip it into support. So even if 30K were the level, you would eclipse it, come back, retest it, then continue, right? Just as we did with this resistance right here, just as we did with 23,000 as resistance, right? You break it, retest, break it, retest. That's what you do in a trend, whether it's bearish or bullish. So again, my thesis for why 30K is not the level everybody's pretending it to be is that look at these ranges. It's too wide of a range. There is no clean and clear level at 30K. And people say 30K because psychologically it's a nice clean round number. So I understand why one person says it and everybody else kind of parrots it. But in actual fact, if you take the levels, if you want to find a clean and clear level, this is the one. This dotted line, okay? It's actually a diagonal, okay? And you can see how I did it. Let's go on the weekly so we can really see what this looks like. Guys, if you're getting value, please like, share, and subscribe. So on the weekly, you can see it a little better. And you can see that it's still not the cleanest, but it does connect. Support here, support here, support here. So it's actually more of a diagonal. And that diagonal, were we to hit it right now, would be at 46K. Does that make sense? 46K. And if you look really closely, again, this is not like, just back of the napkin analysis. This is careful analysis. We're not just pulling this out of nothing. We're pulling this out of a lot of experience and, looking at charts and where does price really respect levels and how does it respect levels? It's based off of the time frame you're on, how many touches, right? How long the support resistance has been there and how many touches price has interacted with that level. For instance, the level that we're at right now, 25K, you can see you have only one, the level we were at, 23K, that everybody says was so staunch, we had 2 touches. And I kept saying, it's not staunch resistance, it's not staunch resistance, it's not staunch resistance. If you remember, everybody's talking about 25K now because that's the resistance. But before, like a week prior, everybody was saying 23K, 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 and I was saying that's not a level. And the reason I was saying it's not a level is because during the course of, how long was it? About 191 days of trading, price only interacted with that level twice. That's literally the minimum that you can use to have a level. So I was saying 23K is going to be eclipsed rather quickly and retested as support. And that's exactly what happened, literally on the first try. Okay? Actually on the second try, right? Because the first time we rejected and came back down and broke it. So 25K is similar in that we hit it once, and now you see it again. We've been in at this level for about 4 days, and everybody, because it's crypto, everybody feels like it's been 400 days. But it's only been 4 days, okay? It's only been since Thursday that we've hit 25K. And you can see on the smaller time frames, 25K proper has been interacted with once, twice, 3 times. This is the 4th time, okay, on the smaller time frames. In any case, my idea for why we're not overreacting with 30,000 and treating that as a high time frame level, and a lot of people actually are making their high time frame theses on why this is a bear market rally based off of that 30K level. Again, it's quite spurious because it clearly isn't a high time frame level. You don't have clean enough interaction. Like price has shown you. It's not just making it up. Price shows you the story that the price action is saying. It shows you at this level there's no clean and clear support, no clean and clear rejection. There's a lot of sort of activity, but there's no clean and clear activity. Okay? So do expect 30K to pose some sort of resistance, and I've tried to represent that in this prospectus, or whatever you want to call this. You know, I just drew this price action, just what I thought was representative of what was likely to happen. Do expect some sort of resistance, but not much. Okay, not as much as you should expect around 46, yeah, or 48, because that is where price more cleanly defines itself as resistance, because we're below it, or support, right? It was support for the price here, it was support for the price here, it was support for the price here. Okay, and that is significant because that's numerous touches, right? 3, 6, 8 touches over the course of 487 days. Okay, so we do believe that 48 is more likely than not where you could expect some stagnation, okay, and not 30. So that is my take, and that's why I have that idea. Okay, Momentum Mori says, I was able to notice that when BTC started hanging out around 24K, this was consolidation at resistance. Learning that from you, I rejoiced when I heard you say the exact same thing today. Thank you. Yeah, definitely. Yeah, consolidation at resistance is good, right? Everybody says, don't be bullish at resistance, be bullish at support, be bearish at resistance. That's a simple way to say it. That's what you learn when you first start, and that's good. That'll help more than it hurts. But when you get more advanced, you understand that at some point resistances are meant to be broken, yeah? But how do you break resistances? By consolidating at them. And I learned this the hard way. I have a visceral memory of getting stopped out of shorts, because I when I first started trading, I was operating with the adage, be bearish at resistance, right? And then price would be at resistance. I'd be like, ha ha ha, you're at resistance. And then I, check my chart. A few hours later, it's still there. And the next day, it's still there. And I'm like, it's going to go down, because that's clearly resistance. But what I don't appreciate, when I didn't want to believe, but I learned the hard way, was that the longer it hangs out and consolidates at that resistance, it's likely to break. Obviously, not always the case, because there are some times where you get distribution and price just hangs out at resistance. But more often than not, distribution looks a little different. Distribution levels, you kind of go up and down in a range, in a higher, with a range that's kind of it's how do I say this? I'm trying to articulate this idea. The amplitude of the range for distributions are wider or larger than consolidations at resistance, if that makes sense. So a consolidation at resistance would look like this. You literally would coil up and then eventually break. You're reducing that. You're reducing your effective amplitude. Does that make sense? Like, you're getting stronger as time goes on. But then when you're distributing, and this is subtle, this is why it's a more advanced topic. When you're distributing, you're not doing that. You're kind of keeping a range that looks very well defined, but it's not like it's favoring one end or the other. That's it. Consolidation at resistance favors the resistance of the range. When you're distributing, there's no favoritism, generally speaking, for the resistance level or the support level, because you're just distributing, right? A good example of that is Bitcoin on the daily time frame. zoomed out back in May of 2022. This is a massive distribution range. Or May of 2021, right? Yeah, May of 2021. This is a massive distribution range. You can see if this was consolidation, it's more likely than not to favor the resistance. But it was distribution, so both the support and resistance got hit equally. And that's what you're seeing in that's a quintessential distribution range. Okay, so yeah, that's why I'm actually I'm not looking at 30. 30 is not anything to me. I would not set my. A lot of people are going to be disappointed. I'll say this: it's very likely. Again, there's no 100%, but it's very likely. A lot of people are going to be very disappointed because they've successfully entered long positions, either down at 16K or at 21K, and they will get this move. And they will take profit at 30K, and price is just going to keep going up. And then they're probably going to get in a little later or not. Maybe they don't. And they just pretty much have to wait until whatever happens at 46K happens. And maybe 46K doesn't even take that long, because if you understand the magnitude of these waves, the magnitude of this run, right, as we can see on the weekly time frame, we have no clue how it's going to get to where it gets in that short amount of time that it's likely to get there. So we're assuming it's going to be a violent move. So in that assumption, it's safe to say that minor resistances aren't going to be treated with a lot of care. You know, price is basically not going to hang out so long at these resistances, even when we spot them on our charts as being significant resistances. So that's why it's always important. High time frame plan informs your smaller time frame trading plans, right? Whether it's your entries on the small time frame, or whether it's if you're going to try and scalp this. And again, I don't know if you can even scalp such a violent move. People are gonna see. I don't think it's possible. Even the best traders need time. You need to see price sort of hang out to make trading decisions, and so that you have time to set your stops and your liquidation points, right? If price is literally in a bull market, people forget, but in a bull market, price literally pumps. It literally goes up. It like breathes and goes up and up and up and up and up and comes down in the same candle that it went up in, so you don't even see the retracements, because whatever time frame you're looking at it in, it happens so fast you don't see it. You have to drop down many time frames to even see the retracements. So people don't have time to trade. This is what people don't appreciate with this move, but they're gonna learn soon if this indeed is the case. Again, you can see this already happening. This is not like if we looked at our general watch list and nothing had done anything like what we expect Bitcoin to do, then I would say I don't know about this theory. But the fact that we're seeing certain altcoins actually do exactly what we believe Bitcoin is going to do. So, for instance, looking at Dodo, this just happened today. This is Dodo's 25K. Okay, this represents 25K in Dodo. What do I mean by that? Quite simply, if you look at Bitcoin, that was the 200 and whatever. How long was that again? 250 day? Yeah, that was the 250-day consolidation in this cup and handle, okay? With the resistance at the top of this 250-day consolidation, okay? Now, if you go back to Dodo, it's the same thing, okay? I know it's a different asset altogether, but I think it's important to see patterns. And if you notice the patterns, crypto trading in 2023 is not that difficult. It's not that difficult because you have so many things that indicate on a high time frame what's likely, okay? You don't always know how it's going to execute that, but it's so likely that putting your eggs, just stating that like I stated in the thumbnail, that we're gonna break 25K isn't going much on a limb. It really isn't. If I told you exactly how, exactly when, okay, then that's maybe some sorcery. But the fact that we're going to break 25K is not a very bold prediction, right? This is the 25K for Dodo. This was the 250-day accumulation, right? 250 days worth of accumulation broken to the upside. What do you think happens from here, right? That's, again, 250 days of consolidation accumulation. This is the cause, that's the effect. To be bearish about this means you understand nothing about support and resistance. You understand nothing about support and resistance, because the idea that you broke significant resistance, retested it as support, should be all confirmation you need, right? But I don't know. Not everybody really learns how to read charts seriously, right? This is basic. It has nothing to do with Elliott wave theory and nothing to do with Dow, Gann, or anything else. It's just basic support and resistance. That's number one thing you should learn and know when you're charting. You see high time frame resistance broken, high time frame support broken, retested as resistance. The retest is crucial, and you should, with a high degree of probability, continue. There is such a thing as a fake out, but obviously you can see we have the continuation there. Nothing more to say about that. This is going to continue to go up. If you zoom out, you'll see exactly the magnitude of what this means. Okay, this is just an example. Dodo is just an example. You can use pretty much any other altcoin that's in this situation to make this, to buttress this thesis, right? That was 250 days, but what about all of this, right? You didn't just break 250 days of worth of resistance to the upside and retested as support, but you also broke this and retested this as support right here. Okay? So you're coming up from that. And actually, you know what we can do? You can see this in a lot of altcoins, but a very effective thing is use the charts that you have. We have the total chart. We have so many tools. If people in the past had what we have at our disposal, they would be amazing traders. There would be, like, people brag about having 70% win rates and stuff like that. Like, in this day and age, with everything that we have at our disposal, all the trading view tools, and I mean, yeah, 70% should be the least of what you do, right? With good risk management, you should be doing great. Your return on investment should be really high, higher than it was in the past. Okay, here's the total crypto market cap. As you can see on the daily time frame, what have you done? You're doing the same thing, and I think you can look at it a little more clearly here. So this is all of crypto, the total cryptocurrency market cap, right? Big downtrend ever since November 2021, okay? Big downtrend. So more than a year going down, 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 down. And once you hit this point, you went sideways. And this represents those 250 days worth of, let's just put this in my hand, 250 days or so worth of sideways accumulation. Remember, why do you go sideways? It's because if you are trending down, you have to go sideways before changing to trend to up. If you're trending up, you got to go sideways first before trending down. This is called an accumulation range. If it was the opposite, we were going up, this would be a distribution range, right? That's pretty much it. A lot of people don't know that these things exist. Besides my friends in Wyckoff, a lot of Elliotticians, they just ignore that idea, the sideways. They don't know how to read it. They don't know, like, they don't pay attention to this. But actually, advanced traders, you should put all your effort into reading corrective price action, because this is the cause for the effect that you want to trade, right? Too many people are only focused on the impulsive price action. Everybody can read impulsive price action. It's just a straight line, up only or down only, fine. But the best traders, in my opinion, read the causes for the uptrends and the downtrends, because that at these levels they accumulate, and they accumulate with total confidence, not hedging up or down, but accumulate properly, accumulate positions, and they enjoy the run properly. So many traders, they have a decent idea of what's going on, but they're kind of limited by their ability to read the markets. And so what they're doing here is they're still hedging. You can only make so much hedging, okay? Hedging is like you're very limited. You're probably intraday trading, you're system-based trading. You're not really reading the market. You're pretty much just reading certain circumstances and hedging, and that's okay, right? To each their own. But the real money is made with riding these waves up or down. When you can see these big breaks, you collect here and then you go away. That's why they have the saying in the traditional finance markets, sell in May and go away, or I think it's sell in May and go away. Because like the best traders can see it coming, they prepare, and there's nothing that needs to be done. They don't overtrade those trends. Okay? So here it's really clear. But it's not clear for most people because they can't read corrective price action. It's just too messy. It takes too much patience. It takes too much work. It sucks. And it's not consistent enough. And trading it is not, you can't really trade. You can trade it, but it's not really tradable, to be honest, to a high level, right? You're not going to make money trading this and have a high win rate. But what you can do is accumulate during this time, or in the distribution phase, distribute during this time. You take that time to sell off. So anyway, here it's really clear on the total crypto market cap what's going on. Okay, you can see it in Bitcoin, but also here. Okay, and so when you're looking at this, begs the question: is this right here properly drawn? Is this the resistance that you broke, or did you not break it yet? You don't have that many touch points, to be honest, on this total crypto market cap, right? I've drawn this, but again, to be honest, like, you have one touch here, that's just 2 touches. You don't have a consistent downtrend like you do in Bitcoin, like you do in some other assets. But again, we understand that this is a kind of collection of all of the assets put together. And in a sense, if you do treat this as a breakout and a reject or in a retest, then you're gone, okay? But if you don't, then you treat this as a something like this or something like that, right? It's a potential retest that can be done. So maybe this isn't the best chart to see this in, because it's not straightforward. It's a bit ambiguous. Can't lie. Okay. But what we can do with this chart, and what we will do, is look at this range. Okay? You're definitely at resistance right here. That support. You're at the top of the range. If you reject, what happens? You come back down. But to come back down, what does that mean? That means you're completely going to retest this level of resistance, or you just stop at the midline. What do? It's more likely than not, what you're going to do is break up and out, retest, and continue. It's just more likely than not. Because if I'm looking down, I don't see any conspicuous, like, oh, that level just definitely needs to be retested. No. If anything, I look at this as a range. You went up past the midline, retested it as support. You retested it twice in this, what looks like a running flat here. Now you continue. You consolidate at resistance and you break out, retest. So this is what it looks like to me, even on the total crypto market cap. It just looks very likely for a breakout. And again, once you break out of this, then you get that big trend. That big trend, right, is the equivalent. Actually, it's not the equivalent of this. It's the equivalent of this, right? But you're basically going into a different mode of price action. You're going to... Let's use Bitcoin to explain this, because people don't understand. Like, whatever we've experienced up until now is not what we should expect to experience. A lot of people have enjoyed trading in and out of these positions, but the only reason they're able to trade in and out is because we've been stuck in this range. This range is by definition torpid. It's by definition slow. It's by definition limited. But you kind of shake the shackles once you leave this range and you go into that kind of price action. So it's a different mode. People all too often look at different modes of price action in the same way, right? Where this is consolidative, right? 253 days of consolidation, and that's the speed and the verve with which price moved. Now, once it leaves, you have to get used to a different type of price action. Maybe 50% gains intraday, 60, 70, 90% gains intraday. That's the new normal. There's a new normal on the other side of 25. That's what I'm trying to say. Yeah? There's a new normal on the other side of 25. So G Tekken says, brilliant work on your point. Let's go. Yeah, let's go. Thank you. So I'm waiting, and I believe that if Bitcoin does this, right, there's no telling how quickly we reach this target, right? It's just at 80% from there, which seems like a lot. Obviously, it seems like a lot when we're thinking of what we've experienced for the past 253 days, but it's not when you look at what impulses do. Okay, 80% is not much. So that's Bitcoin. Now, what we can do is we can look at altcoins, right? We're going to look up and down we already looked at Dodo, but we can look up and down our watch list, and we can look for clues as to what is happening and what's likely to happen. Okay. Same here, just on the daily time frame, not over analyzing anything, but it's quite clear what you're doing here, right? It's quite clear that you put in a move, breaking this consolidation, retesting it in another running flat correction, and that's your breakout. There's no need for any other retest. That would be awkward. That would be odd. Everything's fulfilled here, right? A retest of all significant resistances as support has been executed. This resistance has been retested as support. This resistance has been retested as support, right? Doubly. So this is a breakout, very likely. If it's a breakout in Cardano, it's likely going to be the same thing in Bitcoin, right? It's they're not the same, but things are similar. Okay, and here in Cardano, what we can see is we're getting a very clear consolidation, sort of a bullish consolidation, right? Kind of what I said before. When you're at resistance and your consolidation is favoring the resistance and not the support, and you can see that here quite qualitatively because you see a big wick right here at support, meaning this resistance on the small time frame. You can actually zoom in on the hourly. This resistance on the small time frame is favoring this consolidation on the small time frame is favoring the resistance and not the support. Okay, This is the support level, and the support level, every single time you've hit it, you've bounced off of it. Quite, you only have, here's another way to look at it. You have 2 touch points at support. You have more than that, much more than that at resistance. You're quite clearly favoring the resistance, which is more likely because you're looking to break resistance and not support, okay? When you're sagging and you're coming down and you're always testing support, the opposite is true. Kind of like what the DXY looks like, if we have it. DXY. Here it goes, miscellaneous. Okay, so in the DXY, you could see the opposite is true. Let's see if it looks the part. I think it did, last we checked. You can tell when something's about to break down. Okay, see, here, it's very unlikely, right? You can see, obviously, by the momentum indicator. Let's say you didn't have your indicators up. Okay, again, learning to read price action is invaluable. Look at this consolidation, right? Let's say you had a choice. You have to qualify this consolidation as bullish or bearish. How will you do it? Well, take your support and take your resistance. Where do you think price is more focused on? The resistance or the support? Quite clearly, price is testing support more often than it's testing resistance. So it's literally just the opposite of what we just saw, right? Again, none of this is 100%. But if you read the story in the charts, and you learn to read the stories in the charts, they'll tell you what's likely to come. Okay? Sometimes it's confusing, sometimes it's tricky, sometimes it can fake you out. But more often than not, it's consistent. When you have these sagging, I call them sagging consolidations, they're likely to break support more than resistance. So if I was an unseasoned trader and I just was over-reliant on my momentum indicators, right? I wouldn't know what to do. And maybe I would call this bullish because I see my stochastic RSI on the 4-hourly is about to cross bullish. So I'm like, oh, it's bottomed out. It's oversold on the 4-hourly. This is likely to come back up. But I look at this and I don't make too much of it because of my price action analysis. And the hourly is telling me otherwise. And maybe the 15-minute? Yeah, the 15-minute is telling me otherwise as well. So I'm going to defer to the smaller time frames, although we know typically the larger time frames are a little more reliable than the smaller time frames. So that's a good example of just seeing the support and the resistance and what is being favored by the price action. Here it's quite clear that it's not the support, it's the resistance that you're favoring. So you're likely to break resistance more than support. This is why I said that it wasn't a bold assertion to say that 25K was going to break. So Cardano, what can this be? There's only, well, I was going to say there's only one thing it could be. Let's just say it's more likely than not that this is some sort of zigzag. An A wave in five waves, and then a B wave in what seems to be a triangle, A, B, C, D, E, something like this, yeah? So that's what I think this is. So this is an A wave, a B wave. The C wave is going to be your pure impulsive wave. I think that's what you're looking at. Also, if you look at this in terms of an inverse head and shoulders, you have that forming right here, okay? If you look at Investopedia, you'll see that inverse head and shoulders, they're reversal patterns. The inverse is a bullish reversal. The regular head and shoulders is a bearish reversal pattern, confirmed when you break the neckline, retested as support, okay? So that's what I'm seeing in Cardano. The $1 million question is when, but I think it's more likely than not that we will break it, okay? Bunk, okay, this is one, we're going to zoom out, very bullish on, my favorite shitcoin, and it hasn't done anything yet. It's still in this consolidation range. Okay, and what we did earlier is we tested this midline, which is resistance because we're below it. We rejected from it, right? That's a proper rejection in 3, 1, 2, 3. Okay, and now we're consolidating again to retest it. So we're going to retest it and probably break it this time. Once this goes, it's going to go. And this is the type that is essentially in price discovery once it leaves this range, because there's no prior price action. So this is something that, you shouldn't be surprised if it's doing 500% a day. It's a low market cap new project. So they usually run in those ways. They do 500% for like 3 days in a row, and then they correct 400%, 500% or something like that, Dent, it's already broken out. Okay, so whatever you saw with Bitcoin, with Cardano, this is a smaller cap altcoin. This is already broken out. This is showing us what is to come. Okay, essentially what you see here is this entire range right here. Sorry. This entire range right here that it's been in since May, right? So almost 300 days. Broken to the upside, retested as support. Actually, retested as support like this. 1, 2, 3 in a running flat correction. And then your impulse starts here. This is your impulse. Wave 1, wave 1, wave 2. Sorry. Wave 1, wave 2, wave 1, wave 2. Remember how it works. You're going to put in a sequence of wave 1, wave 2 Elliott waves. And you're going to go smaller in degree. So you're going to put primary wave 1, primary wave 2, intermediate wave 1, intermediate wave 2, minor wave 1, minor wave 2, minute wave 1, minute wave 2, and so on and so forth. And you're just going to build the wave, and it's going to get massive. And this is how these small altcoins, small cap altcoins do 300-400x, because they just keep going in that way. So this is already kind of showing you what's likely to come. Yeah. And this, since let's see, since the 13th is already up 70%, which is not that much, but it's something. Okay, it's something. But if I was a proponent of the bear market rally theory, I would not want to see pure impulse like this, because there's nothing corrective about this. What I would want to see is something that goes up in 3, right? Because typically the 3-wave move is corrective, and also it's pitched not as acutely, but something that's pitched more like it's kind of like going up in a rising wedge, which then is likely to break down. Okay, if I'm a proponent of bear market rally, that's what I want to see. I want to see 45 degrees or more obtuse. I want to see angles, a lower angle, either 45 degree or lower, to show a counter trend rally. That's a bear market rally. But there's nothing counter trend about this, right? That's pure impulse right there. At least it looks like it. I mean, this is completely straight, right? We already looked at Dodo. We already talked about Dodo. This is completely straight. You do not want to see this if you're in the camp of this is a bear market rally. Again, this is an indicator, right? You can use your altcoins as indicators. And here, this is basically showing you this 253-day resistance or 300-day resistance, whatever it was broken to the upside. And, sorry, I drew that wrong. It's broken to the upside, retested as support, and continued on. There's nothing bearish about that. That's not a bear market rally. And crypto doesn't work in this way. Dodo or any other small market cap altcoin is not going to do a 20x while everything else pukes, right? obviously you have the one-off. You have some exceptions, but by and large, small cap altcoins do not rally when Bitcoin's about to puke. And if Bitcoin pukes, that does not happen, right? This is going to rally. It's already rallied significantly, well, for the day, at least, right? Today's the 9th, or today's the 20th. In any case, it's up. It went up 96%. It came down like 70%, right? It's putting in a wave 1, wave 2. You don't want to see this if you are a bear market rally proponent. Back to the daily time frame, looking at Dogecoin. There's nothing bearish about this. And the most unbearish thing about this, or the most bullish thing about this, is the fact that every major resistance has been flipped to support. Broken and flipped to support. Every major resistance right here, the top of this bear market accumulation channel, broken, retested as support. You don't want to see that. That is very bullish. It's not if this is going to break out, it's when. And when it breaks out, it's going, gone. Okay? It's at 8 cents right now. This isn't going to stop anytime soon, because you can see this is a massive bull flag. For the bear market rally proponents, you know, a lot of times people say stuff and I don't know how deeply they think about it. Maybe they just parrot things, but if you're looking at this, how in God's name do you expect this to continue to be bearish for a year? Maybe you expect this very clear bull flag, very clear, right? You were under all this resistance for all these days, right? For like 600 days. You come up, you retest. What do you do from here? How is this a bear market rally? Do you stop here and then come back down? Like, how does this work? I just, people say it, but I've never, not once, seen anybody on any channel, and I watch a lot of my peers, a lot of YouTubers. If you're watching this and you're a crypto YouTuber, I've probably watched your stuff. You know, that's just my passion. You know, I have a high tolerance for good analysis or bad analysis. You know, I want to listen, because even if I disagree with your point, maybe there's something that you say that I haven't thought of or that I'm not seeing. So I listen for that. I'm always listening for the thing, the way to read the market that I haven't seen. And this is how I grow, right? I love collaborating in that way by listening and being open to other points of view, right? Even when sometimes it's not rooted in any kind of proper technical analysis. But the best case for what I've heard in the crypto market, in the crypto analyst sphere for a bear market rally, is the fact that we are going to have the halving in a year and 18 days approximately. Okay, and I addressed that over the weekend in a video, saying that if you look at the halving, it doesn't necessarily mean that we have to go sideways for a year. People are misreading the market. Let's just look at this really quickly. Okay, I talked about this over the weekend, but I'm just going to give a brief sort of update on this. Basically, the prevailing opinion is that you can't go into a bull market now. It's not possible because you have yet... Sorry, I'm going to turn this on right here. Where is it? Sorry, one second. I gotta add it again. I think it's this one. Yeah, okay, here we go. So yeah, this is the Bitcoin halving events. Okay, it's basically showing you all the different halvings. And one of the reasons people are saying that we have to go sideways for the next year is that every single time we did a halving, we came down from a top and went sideways first before going up. Okay, so they're seeing this as the top, this is the sideways, kind of upwards price action, but not like impulsive, super, strong move up, right? And that's the halving. Okay, move down, sideways, that's the halving. Move down, sideways, that's the halving. Okay, again, just like a lot of high time frame analysis with Bitcoin, people forget that your sample size is not too large. You can't base you can't base your super important decisions on whether to buy or sell on an asset's history that's only 14 years old. Okay? Bitcoin's only 14 years old. It's not the only asset trading on an open market in the history of mankind. So if all you know from technical analysis is what Bitcoin did for the past 14 years, thinking that that's the sum total of everything that is always going to happen, then you have no clue what you're doing. Okay? And it's actually quite arrogant because you're dismissing and you're ignoring all of the wisdoms that we as a race, as a people, as a society have cultivated from technical analysis of traditional markets. I don't trade traditional markets, but it doesn't mean you can't learn from them. And if you want to learn how markets behave, you want to learn how to read markets, it behooves you to learn outside of the context of only cryptocurrency. So just saying that because the halving, so it's logical, but it's very limited logic. Do you understand what I'm trying to say? It's kind of like this happened twice before, or this happened 3 times before, roughly in this way. So I expect it to happen again in the same exact way. And again, roughly, because look, you're clearly in an uptrend here. You're clearly already in an uptrend here. You're clearly, well, this is the only one you weren't in an uptrend, but you were clearly 2 times before you bottomed and then you went up after bottoming into the halving. You went up into the halving. Except this time, you're likely to go up quite substantially and then come down again. Okay? Only because that's what our Elliott wave analysis shows. And again, this has nothing to do with, oh, we did this twice before, so we have to do this again. People make a lot of, how would you call that in logic? It's I don't know exactly the terminology, but they do things, silly things. Like, this bull market took, this many days. That bull market took this many days. So this should take the same number of days. It's like, I get it. That's what a child would do, though. You know what I mean? Like, your analysis has to get a little more subtle. And the idea of diminishing returns, all that stuff, it's from that really simplistic, overly simplistic, sort of ignorant view on the market. And it's ignorant because Elliott wave theory exists, Dow theory exists, Gann theory exists. There's so many different ways we've been looking at markets for 100 years, right? To ignore all of that and just say, yeah, I know markets because I've been looking at Bitcoin for the past 14 years and I know exactly every move it's going to make is silly. It's silly, right? So the reason most people think that we're not going to make higher highs, that, hitting 46K and, 6-figure Bitcoin before the halving is impossible because of what happened the past 3 times. It's as simple as that. And nobody's given a better explanation, right? And the interesting thing about it is we have every metric, okay? If you really look and study these markets and you think about what's going on, right? Let's go to Dan, what's it called? Damn it, what's it called? It's called CBBI. That's what it is. I blanked out. If you look at the Colin Talks Crypto Bitcoin Bull Run Index, it's a really, really useful tool that compiles a bunch of useful indicators, right? On-chain indicators that show you the trend, okay? So basically the people who are saying we're going to go sideways for the next year, they don't appreciate any of this data. None of the data really corroborates that theory. Really nothing does, other than the really spurious claim that in the past two bull cycles, the first two bull cycles, we went down and then sideways for a while before hitting the halving. But if you look, the index compiles all of these indicators, on-chain indicators, which I don't talk about much on the channel because I don't really need to, right? I focus on what I know. But if you use this to corroborate your reads, you'll see we're historically oversold. Historically. The pi cycle top indicator, the Nupal, the Rupal, our hodl wave, Peel multiple, 2-year moving average, Bitcoin, Tralolo, all that stuff, MVRV, printing historic figures, right? And you can go into more detail. This doesn't really interest me that much, to be honest with you. I just look at it cursorily sometimes. But you can see very easily, very clearly, that we're in historic territory for bottoming and a move up, and a subsequent move up. So that's all I'll say on the halving and stuff like that. So back to looking at our altcoins. Moving down the line. Where were we? We're at Dogecoin. Okay, so that looks really good. Let me turn this off. Okay, so Dogecoin looks really bullish. Let's go back on the daily. Okay, we get that. Okay, ETH is kind of in the same situation as Bitcoin. And you can see exactly what's going on. We're at high time frame resistance, right? We're consolidating at that resistance, right? This is the consolidation, the initial consolidation. And essentially we came back up after having completed that initial move. So this move right here in Ethereum serves many purposes. One, you're retesting this accumulation channel as support. So you broke up, you retested as support here. You're actually doubling retesting it. You're retesting it once here, once and again there. You're breaking this resistance of like 450 days and retesting that as support. Do you understand? So look, Ethereum is showing you that in this move, with this chart, the likely move is up and out. There is no coming back here. There's no need to come back here. Every resistance, every high time frame resistance has been flipped into support. Right here, right there. There's nothing else to do but to break and resume the impulsive move to the upside for ETH. Okay? So if we look on the smaller time frames, oops, let's get rid of that. Okay, if we look on the smaller time frames, let's jump down into the 4-hourly. It looks once more like what we saw in Cardano, what we saw in Bitcoin. Support and resistance analysis, okay? You have some sort of consolidation. You're trying to determine if it's distributive or cumulative, right? If it's accumulation, that means it's a reaccumulation of some sort. You're going to come in, accumulate, breakout, right? It's going to be a bull flag. If it's distributive, this is a reversal. Okay, what's more likely than not? The fact that it is accumulative, because you can see there are two instances that you tested support. There are 1, 2, 3, 4, 5, 6 instances where you're testing resistance. Price is telling you that resistance is more interesting. Testing resistance and trying to get through resistance is more interesting. It has more buying pressure forcing it to test resistance than it has sell pressure to test support. Okay, so just looking at the price action, you can into it, you can infer that this is likely a bull flag, which would yield a breakout. And that breakout would take you into a different mode of price action that you haven't been in Ethereum for hundreds of days. Yeah. Again, you can also look at this as a head and shoulders, an inverse head and shoulders like this, with this being the neckline. So you're right at it. Okay, it's not a question of if, it's a question of when. Nothing 100%, but we're dealing probabilistically. Probabilistically, more likely than not that you break this to the upside. And once you do, don't expect it to just pitter-patter up, okay? On the higher time frame, you can see what this means. This essentially means a resumption of this trend right here. This is the trend. This is the counter trend quite clearly. 1, 2, 3, right? These corrections happen in flavors of 3. Consolidation for this this aspect of the correction, which is impulsive down, right? You have to absorb that and reverse that. That gives you the ability to do that. This is a resumption of that, right? So the verve with which you moved here, you should expect to move here, okay? Similarly, or if not even more, depending on what the count is on the high time frame. If this is a wave 1, then you're going into wave 3, expect to move even more violently. If this is a wave 3 and you're going into wave 5, expect to move a little less violently, but still violently. So that's Ethereum. Again, we're just waiting, right? And a lot of times good trading is boring, right? Bad trading is, surprise, breaking, or I don't know what, it doesn't matter what thumbnail you put, but oh, just in, this is happening. Oh my God, we didn't see this coming. You shouldn't be caught unawares so often. It happens sometimes, but you shouldn't be surprised by every little move that happens in the market. Even though you're prepared for both, you shouldn't be surprised, right? And hedging both ways equally is not necessarily the most... Yeah, it could be profitable if you execute properly. But you don't necessarily need to do that if you're reading the stories, right? And you're practicing good risk management. You should be much more profitable zooming out, reading the higher likely probability, trading for that with good risk management. That's just my opinion. Okay, in Litecoin, what you can see here is a clear inverse head and shoulders forming. Yeah, you can also say that this is a wave 1, wave 2 situation. Yeah, and we know that those are likely when you have the time it took for your purported wave 1 take around the same time. So here, 2 days, 20 hours for wave 1, and about the same time for wave 2, I believe. I would say about here. Yeah, 3 days, 8 hours, 2 days, 20 hours. About 3 days. About 3 days. 3 days up, 3 days down, more or less. Okay, because I would count this as a consolidation reversal right here. So this is what I'm seeing in Litecoin, and your subsequent corrective move was a super running flat right there. Okay, so none of this looks bearish. None of it. I just don't see bearishness in the markets when I'm zoomed out, and it's not particularly confusing. Yeah, look at that. Look at the 4 hourly on Litecoin in terms of momentum. There's nothing bearish about that. Look, that is about to destroy to the upside. Look at that consolidation, that oversold consolidation on the 4 hourly time frame. When that takes off, it's going to be violent. That looks really, really nice. Okay? So it's just a matter of time. Good trading sometimes is just you're waiting. You're waiting. You have a thesis, you wait for it to play out. RSR has already started. You can see how you had an inverse head and shoulders. It broke out to the upside, retested. Maybe it hasn't completely retested, but this broke out. Maybe you get something like this to come back down. Wouldn't surprise me. Actually, that would make a lot of sense. Reason being, look at this. Executing this kind of retest would give you not only a retest of this neckline, but also a retest of your high time frame downtrend, this diagonal line, right? So I think this is a high likely move, highly probable that RSR come back down about, it's a 20% move, 22% move, yeah? 22% move. And that's, neither here nor there, because you've just put in a larger move, in the past few days. In the past few days, specifically since the 13th, you've gone up about 55%, right? So if you come down 20%, you're still quite bullish in terms of positive price action. So, all right. Moving on. SHIB. What does this look like? I want to say, upon first glance, that this to me looks like a rising wedge. Okay? That's my first inclination. Like, I'm seeing this as A, B, C. Something like that. Something like that. Could be wrong, but that's what I'm seeing. It doesn't look like this breaks up. Okay? It looks like it breaks down before it breaks up. Okay, I'm going to throw on my indicators, my momentum indicators. So my daily's really bullish. It's all the way oversold. My 4-hourly looks like it's coming down. I could be wrong. This could be some sort of consolidation, but just a diagonal consolidation, right? And we come down to the bottom of this range, which wouldn't surprise me. That wouldn't surprise me. And that would take our momentum down here. Let's look on the hourly. Yeah, that wouldn't surprise me. If we come down just a little bit to the bottom of the range instead of completely down. It just looks a little unorthodox in terms of a base for a bullish breakout, but it could very well be just a really bullish consolidation. Really bullish consolidation right here. Yeah, that could very well be the case. I would not bet much on anything going down in any of these crypto markets, right? You will get some moves down, obviously, but I wouldn't put much money on things going down. If I had to, and I am betting, and I'm doing quite well, right? Most of you who are long will see that you're doing really well, actually, and we haven't even broken out yet, right? More often than not, when you're playing the trend, you're going to guess right. You're just playing the probabilities. Even if you go counter trend, you go against the trend briefly, you're eventually going to make that up, and you're going to win most of your trades by going in the direction of the trend. So that's it's a little ambiguous here on SHIB on the smaller time frames. On the larger time frames, very little ambiguity on the larger time frames, right? And zooming out, when in doubt, zoom out. This high time frame downtrend since October, November of 2021 broke into the upside, retested as support. I think you retested it as support here on a smaller time frame. Okay, we're on the daily, but I think that's already been retested as support. You break through this resistance, retest it as let me see. I don't know. I would not be surprised if this this was not a proper retest of this resistance as support. You come all the way back down to this midline, touch that, and then you go up. Wouldn't be surprised. Wouldn't be surprised if SHIB came down to 0.0001. Let me just check my position real quick. Would that offend my position? I think I'm fine, but let me just double check. Okay, in that case, let me move down. I'm just going to make sure my position is out of that line of fire. Or, sorry, my stops are out of that line of fire. Yeah. Yeah, okay, cool. I just don't want to get hit with that move down, because that could be a significant move down. And typically, right before a big move, you get volatility in the opposite direction. So that wouldn't surprise me that much. What's the other one I saw that was likely going to have... Oh, RSR. That's the one. And I think I can take that. Let me just double check here. Always got to manage positions. It's a big job. Somebody's got to do it. 4, 4, 4, 3. Let's see. Yeah, I should be okay. I should just about be okay. And in any case, I could just get back in and I won't lose anything because the stops are already in profit. All right, moving forward. Synthetics. You've essentially retested this midline as support, right? Broke it as resistance, retested as support once, twice. You're coming up. Your next target is the top of the range quite normally, naturally. And then breaking it, retesting it, moving forward. Okay? Nothing bearish about this. Nothing. Tron. I'm thinking because it's kind of been at this level for quite some time, right? You hit this level once and then you kind of hung out at this level for a few days. So my initial thought is that's resistance, and that's not something you're breaking on this go around. You're going to come back down before you break that. One second, let me just take my shirt off. Or my sweater, not my shirt. It's not that kind of stream. Let's see what our momentum indicators say. Yeah, see, that would not surprise me. That wouldn't surprise me. Let's go on the 4-hourly time frame and see what this looks like. So you can be very bullish, but still watch for downside price. But okay, so on the smaller time frame, this doesn't look bearish. On the smaller time frame, this looks like this was 1, 2, 3 a running flat that you used to retest this 600-day resistance as support. And basically, you moved on from there. You get pure impulse from that point on. This is, to me, a wave 1, wave 2 situation. You take about the same amount of time in wave 1 as you do in wave 2. Okay? And basically, everything from here is a smaller degree wave 1, wave 2 that look bunched up and essentially are giving you your leading diagonal. So if you will, it looks like you're putting in a really aggressive bull flag. So on the daily it looks quite bearish, but actually on the 4-hourly time frame it looks very bullish. And you're really aggressively working on this resistance right here. Right? So I'm actually quite comfortable not expecting much of any downside from Tron. And like I said, I think this is going to be one of the best performers, high cap performers in this bull run, just because of the high time frame analysis and what it's done for the past 650 days. It's going to be remarkable. So XRP, same thing as synthetics, I believe. You just broke this midline, retested it as support once and twice. Now you go up from here, right? Up until which point you clear this consolidation channel. Your next clear target is the top of the channel, around 49 cents. Retest it as support, and then you're off. And then the real party starts with XRP. I know a lot of people are going to be really excited about that. Zilliqa is super, super, super bullish. Look at that. Let me get rid of these so you can really see what I'm talking about. This is bullish consolidation at its finest. This is exactly what you see when you look up a bull flag, right? That's exactly what you see. This is textbook. So you're basically putting in an A wave, a subsequent B wave. All of this is, maybe it's a B wave, maybe it's a wave 4, I don't know. It's a consolidation, and it's bullish consolidation. Again, put support, put resistance, and look where price favors. Price clearly is favoring the resistance level, trying to break the resistance level because it's pitched up and to the right, okay? Not always, but a lot of times, there's a lot of buy pressure. It pitches this flag up and to the right. So that's what we're seeing here. It looks very, very bullish. Also, if you just look at it as an inverse head and shoulders, that's what it looks like. And the bottom here, kind of, let's see. Yeah. So the bottom here is your previous left shoulder support. So you're flipping this left shoulder's resistance into support. So you broke the resistance of the left shoulder and you're flipping it into support into your next move. That's really bullish. Okay, V-chain, it's already started. Same idea that we just saw in XRP. You broke the median, retested it as support, consolidated, you attack the top of the channel, you break it, you retest it, and you're off. Okay, that's all there is to it. And actually, if you look even a little bit more zoomed out, you can see. Let's try that one more time. There we go. You can see that this is your 250-day consolidation, right? This is your proverbial 25K for Bitcoin that you just broke to the upside. Do you see that the altcoins can be used as an indicator for what's likely to come in Bitcoin? They broke their 25K, right? This is this level right here at about 2.6 cents for VeChain is like the 25K level for Bitcoin. It's broken to the upside. Expect it to go. It's not a question of if, it's more a question of when. And we can say, even with a high degree of probability, how. Obviously, you could say it's gonna break 25K, but first it's gonna go down to 10K, but that's unlikely. That's very, very, very unlikely. Theta token looks like it's at its high time frame resistance, but it's just now breaking it to the upside. Okay, again, this represents the 250-day retracement. Not retracement, consolidation level. So you're breaking high time frame resistances to the upside. You can see it in the altcoins. You should expect the same thing in Bitcoin. You shouldn't be surprised that Bitcoin's lagging because it's a proper bull market and Bitcoin's always going to be the laggard. That's why Bitcoin dominance goes down. This is another cup and handle pattern, kind of like what you see in Bitcoin. This is your 250 days of consolidation, and you're breaking up and out. Okay, you're kind of on the precipice. You're on the neckline. Even more interesting is if you look at Telcoin on a high time frame, you can see that it's in a massive bull flag. Okay, it's a massive bull flag where price is clearly shown a penchant for breaking up rather than breaking down, because it consolidated and now it went up, obviously impulsively. It consolidated, now it came up, and it's consolidating at resistance to break up and out. So once it breaks up and out, then it really flies. It really, really flies. And when this is going to happen, if it's in the next hour, in the next day, in the next 2 days, it doesn't really matter. What matters is your position to take advantage of that, right? The people, the traders that don't see the high time frame move and the magnitude of the high time frame move and the strength and speed of the high time frame move are not going to be able to manage it as they have been the sideways price action. They think that the sideways price, or they think that what's coming, the break of 25K and the break of all of these 600-day resistances, 450-day resistances, are going to yield slow, kind of, docile price action that they can trade in and out of. They won't be able to. And this is why all you want to do, prepare and get out of the way. You buy and get out of the way. That's the smartest move. Not really seeing how the price action can be violent is also really it shows inexperience, right? Because there's an assumption that price action is always going to be like this, up and down, slowly. If it goes up, it's slow. Gonna consolidate, gives you enough time to get up and out, take profit, get back into a counter position. It's not gonna happen like that. Very unlikely to happen like that. It's just gonna be a different kind of market, right? So, speaking of portents, speaking of using this as an indicator, speaking of using altcoins as a crystal ball in a bull market, this is a perfect example of a cup and handle, kind of like Bitcoin. Okay, you could say this is the handle that broke up and out, broke up, retested, and now is gone. Okay, Matic. What would we expect any different? This is exactly what happened in Matic. Would you expect this to now all of a sudden break down? No. It should continue because it's clearly an impulse, pure impulse. DYDX, great example of a high time frame consolidation, broken to the upside, retested as support, and continued. That's it. Very simple. Nothing to do here. All you want to do is buy, forget about it. The next analysis you want to do is a high time frame target, like on the weekly or the monthly. But you don't want to do anything about this. These altcoins can make you millions. Really simply, can make you millions with not that much put in as a seed. But yeah, so many people are going to sell early because out of fear and ignorance. You're going to sell early, and that's essentially selling the bottom of the move, because these altcoins go, and they go for a while. There's no need to trade in and out of them. They take care of themselves. Here's another cup and handle. You just can't, it's just not as clean as the other ones, but it's another cup and handle in harmony, right? You're breaking up, retesting, and you go. When do we go? Who knows? But it's going to be soon. That's what this says. It's going to be soon. MOVR. It's already broken up and out of this massive consolidation, right? 300 or so days of consolidation, 250 days of consolidation, whatever you want. Broken up, retested as support, break up and out. Already in the past few days, MOVR has put in 60%, 64% to the upside, okay? If you're bearish on crypto and you think that we're in a bear market rally, you don't want to see this. What you want to see, once again, is something like this. You don't want to see clean and clear impulsive price action to the upside. You hate it, right? You don't want to see high time frame resistance turned into support, right? Your thesis goes out the window. A lot of people, either they don't know how to read charts or they're just saying stuff, because there's nothing bearish or bear market rally about these breakouts. Chainlink recently broke the midline of its channel, retested as support somewhere in all of this, and now is going to attack the top of the channel. Okay, there's a few assets that are doing this, so that is not anything out of the ordinary. What we want to see, and what we're likely to see when it gets towards the top of the channel, is it breaks it, retests it as support, and then continues. Polkadot, beautiful break of the entire consolidation channel, retest as support, and it's off to the races. This is pure impulse, not what you want to see if you're a bear market rally proponent, because this is nothing like that. This does not look like a bear. A bear market rally is what we saw in Bitcoin when Bitcoin went up to 69K, came down in 3 waves, went up in 3 waves. That's the bear market rally, pivoted, and then came down in a double zigzag. That is a bear market rally. That's a quintessential bear market rally. You go up in a flavor of 3, that's corrective. It's a mid move, meaning the first initial break of structure shows you where the market's going eventually. This is a counter to that. That's the definition of a bear market rally. People just throw these things out. Bear market rally, okay? And those people are probably, because they're hedged, they don't really have any conviction on the high time frame. You want conviction on the high time frame. Let me just say a word about this. Nobody knows exactly when the market is going to move and how it's going to move, right? All the little minutia, like, all right, you can say very few people, if it's very difficult, highly improbable that you can read the market with that level of accuracy. But when you're getting on a high time frame, it's different. You're getting on the weekly, the daily, and you're saying nobody knows. It's kind of like saying, well, Bitcoin could go up or down. I mean, next decade it could go down to 0. Nobody's saying that. And if you think that, then you shouldn't be buying, you shouldn't be investing. Quite simply, do you see what I mean? So when people say, oh, how do you pretend to know where the market is going to go? I'm on the high time frame. I see high time frame moves. These aren't little breaks of resistances and retests of support. You're retesting 230 days, 450 days, 650 days sometimes as support. That's a clean and clear move, right? And so when you're trading these things with conviction, it's because those things happened, not because you're some sort of wizard that knows exactly how the market's going to move. This is just probabilistic. So if you still think market's going down to 10K, what are you reading? That's the question. What are you reading? You're not reading the market. What you're doing is you're thinking about what happened in March of 2020, and you don't understand what a flat correction is, and you think that the drop in March of 2020 is representative of what's likely to happen throughout the market. And I typically hear the term double bottom, and people don't even know what a double bottom is, right? It really depends on the time frame, but you can describe a double bottom as an Adam and Eve bottom, right? But essentially, you're making a base and then you're retesting it. That's a sort of a rough way of seeing it. But what do you guys think this is, right? Those people saying it needs to double bottom, what are they looking at? That's the question. They're not looking at the charts. Again, that's the issue with technical analysts who stray from their technical analysis and talk to you till they're blue in the face about PPI, CPI, the Fed, what Powell's doing and stuff like that. That's not technical analysis, right? And how scarred they are from March of 2020. That's not technical analysis. Because just because it happened in March of 2020, that's one way to correct. That's one way the market decided to put in a corrective wave. That doesn't necessarily mean we get exactly the same thing. That wouldn't even make sense in this instance, right? In any case, we continue. Key. All right, this is another great example of what is likely to happen. Now, in so many ways, many assets that we've looked at have shown this consolidation pattern, okay? And again, my double bottom friends, what do you think this is? Okay, in another way, when you talk about A-B basing, when Ralph Nelson Elliott talked about A-B basing, this is exactly what he was talking about, right? You can break it down into smaller components, right? Like I always talk about 2 degrees of A-B basing in a pivot, but essentially on the high time frame, right? These people, like in Elliott's time, they were on the daily time frame, doing it by hand. All they could see with, what they had available to them was this double bottom. This is why he talked about A-B basing, not 2 degrees of A-B basing in a pivot. He wasn't zoomed into the minute chart. He's talking about this double bottom. This is what you have throughout the markets. If you're expecting anything more, you're going to be sorely disappointed. And you're probably underexposed. And here we go. What happened once you broke this accumulation channel? You go into a different mode of price action. Do you see how price action up until now was kind of not moving fast? It literally pumped in the span of a day, or 2 days rather, right? Let's see, 1, 2. That's 2 candles, right? Here, I'm looking at these past 2 candles. 260% in 2 days. That's modest. That's a bull market. That's exactly what you should expect, right? Obviously, this is a small cap token, but this is what you should expect. Big moves, volatile moves, right? Nothing more, nothing less. At this point, given that it's already 5:04, I wouldn't be surprised if we didn't get a move until what is it? 7:30, something like that. Whenever the pre-trading opens for the following day. What time is it? It's gonna be from 5:30 to 7:30. Yeah, I think 7:30. Yeah. So I think what's likely to happen is the DXY opens for pre-trading at 7:30, around 8 p.m. Eastern Standard Time. This rising wedge finally starts to break down around then. Okay, we see the 4-hour doesn't tell us much. The hourly, the 15-minute. Yeah, okay. I wouldn't be surprised if that happened in terms of timing. And that's when Bitcoin decided to go. Right? It's pretty much hanging out, about to do its thing. let's look at it on a smaller time frame. So yeah, see, you're bottoming out on the hourly time frame. You know what? I said this before, and this may be what we actually got. I put this as a trading view idea, right? I just threw it out there. I was like, maybe we're gonna put in an ABCDE triangle, right? Wouldn't be surprised if that was indeed what ends up being the case instead of a running flat, right? Thus far, it's doing. No, it would be right here. Something like this. Something like this. Right? Maybe. I don't know. In any case, this is bullish consolidation right here. Right? Favoring the top, resistance likely to break out. So, yeah, the move is to prepare for that. And obviously, you always want to protect against downside. You know, that's risk management. It's not 100%. Nothing's 100%. You make a call, you formulate a thesis, and you trade it to the best of your ability with good risk management. And that's what we've done, and that's what I've done. And so far, if you've been bullish since the beginning of January, you've been up a shit ton, right? Your positions are up, and you haven't even broken these major resistances. Well, you've broken major resistances, but you haven't broken this major resistance. So, yeah, that's pretty much it. Guys, if you've gotten value, please like, share, and subscribe. That's it for me. Hopefully, next time we talk, we will have gotten a breakout. And like I said, I do not expect 30K to be the level everybody thinks it is. I think we go much higher, much faster. Even if we briefly respect some sort of resistance here, I think this move culminates in a little more resistance around the 40s rather than the 30s. So yeah. All right. That's it for me. Take care. Bye.